Welcome back. With 10 minutes left, the rally continues. The Dow up 374 points right now. Joining us, Paul Dietrich from Fairfax Global Markets and Bruno Delama from Global X Funds. Who's the one that says 7 to 9% higher from here? Okay. How's that going to work?
I mean, the market's gone up, what, 6% in the last week or so. The underlying U.S. economy is doing really well, and I think actually will be helped by some of the troubles in China. And this is also the year before an election year. And if you look at every time we've had that, we've had a really good year. And if you look at the pullbacks over the last 5 years, we've had the pullbacks in the fall, and then we've had, in many cases, double-digit gains by the end of the year. That's going to happen this year, too.
You convinced, Bruno?
Yeah, I mean, the U.S. was a few weeks ago the most expensive market across global markets. I think this has been a very good, healthy, natural pullback. Valuations are more reasonable. 9% seems a little bit of a stretch for us, but we like the markets as they are today. They're more fairly valued.
All right, gentlemen, hang on one second. We have some breaking news from the World Bank. Sue Herrera has details on that for us. Sue?
And actually, Bill, it pertains somewhat to the discussion that you're having right now. Financial Times interviewed the World Bank chief economist who was warning the Federal Reserve to delay any rate rise. He says that the Federal Reserve risks triggering, quote, panic and turmoil in emerging markets if it opts to raise rates at its September meeting, and should hold fire until the global economy is on surer footing. In addition to that, he highlights the mounting concern outside the U.S. over the Fed's potential liftoff, and with what happened over the last 2 weeks in China. He's addressing the market turmoil. He said if you put that all together, it leads one to believe the scenario is looking worse than it did even in June. So he is urging, Bill, the Fed to stand pat, at least for September. Back to you.
Sue, thank you very much. Bruno, I saw you nodding your head. Do you agree with him?
Actually, I don't. I don't think it's a big deal. I think we're better off just
You don't think
a
a rate hike in next week would be a big deal?
Yeah, I memean, September, December, it just needs to happen. The economy is in generally good footing. Sure, there's not a lot of inflation going through the system, but, the general data is not bad. I think we should just do it. It's not a big deal.
But, Paul, do you agree that, I mean, listen, it's still for the World Bank to come right out and say it. What do you make of that?
And the IMF is on record as saying they don't want to see it this year either, by the way.
Yeah, I think this is all orchestrated. I mean, you don't get the head of the IMF and the World Bank saying these things without having consulted.
They don't pick up the phone first and call Janet Yellen, right?
Yeah. So I believe that this is a signal to the market that we may not see a rate hike.
But doesn't this actually make it, if the Fed wants to show it's not bowing to international pressure, wouldn't this actually make it more likely for them, or more necessary for them, to do something to say, hey, we're still going to do it?
They could, but it doesn't make any sense. I mean, with the Chinese lowering rates, their rates, it means that everything people buy at Costco 3 months from now is going to be cheaper than it is today. And so what we have is deflationary pressures coming in everywhere in the world. There is no reason to raise rates. And with the dollar as strong as it is, that's a de facto rate raise anyway.
Yeah, that's true. Good to see you both. We have to go at this point. Thanks for joining us today.
Thank you, gentlemen.